Good morning. For those of you who don't know me, my name is Chris. I have been a CPA for 30 years, 31 or 32 actually, but who's counting? Anyway, I want to talk today about, most of what I post are questions from clients, from either clients in our group. I have a couple of groups that we sit and meet once a week. We meet virtually, but questions come up. So this was from a young rancher, and his question was, do I need an LLC, or can I just get by with a Schedule F? And I've taken some notes. You'll see me glance away. I'm not the best. I'll get better. But, you'll hear different things from different people. And it really, there is no right or wrong answer. Each situation is different. But today in this video, I'm going to break it down step by step, piece by piece. Hopefully, by the time you've watched all of this, you'll understand, what an LLC will do for you and what it won't do. How simply form of an entity is not everything you need. You need to also, what I call walk the walk. I'm not just set up the LLC, but we'll get into all of the steps in the video. At the very end, I'll give you everything I think is pertinent to the LLC. So, I want to start off with a story. And this is separate from this young rancher asking me this question, but it involved another young farmer and rancher. He did both. And he just started a herd. He had access to land. Everything was going good. Young guy. He had some fencing issues. And cows got out. And it was early morning, young neighbor down the street going to work in the fog, hit one of those cows. And the parents sued. And that brought a lot of attention to this LLC fact and LLC question for that individual. Thank goodness everyone was okay. The kid was hurt a little bit. It was in the summer. He was going to or from work or something. I don't remember exactly the details, but he hit the cow, and you would think, I've had other ranchers, longtime ranchers, tell me, look, if you hit a cow, that's your own fault. Not always. And you got to remember in our society, and you can sue for anything. You may not win, but it's still a horrible process to have to go through, especially when you're a young rancher, especially when you have some inherited land. So you have some inherited equipment. You have things of value. You're not making any real money yet. You haven't built a lot yet, but you've inherited what those before you had built. So all of a sudden, all those kids' personal assets were at risk. Farm and ranch equipment, land, anything else of value that they thought they could get their hands on. He had insurance, which was good. That gave the people suing a place to go, but it could have been worse. They could have not been satisfied by the insurance, whatever. The point of the all of this is I'm going to let you know why it matters, what you have to do to keep the integrity of that LLC, that structure. It's not just a matter of setting it up. So let's get into it a little bit. Agriculture is one of those industries that involves not necessarily a lot of cash, not necessarily a lot of employees, depends on, the size of the ranch and that sort of thing, but you have land worth a lot of money. Typically, it's inherited land. You have unpredictable pricing. Your commodity prices are completely unpredictable. You've got livestock liability. You've got equipment loans. You may or may not have employees. You may have contractors. And you've got to really distinguish between those two. Because if you've got an employee, and we won't go too far down that rabbit hole, but you could have someone you call a contractor that is actually an employee. We'll go there later. So you've got all these things. You've got all this ancillary type income. Maybe it's duck hunting leases or hunting leases of some sort. Maybe you've got additional grazing leases where you lease pasture land out to other individuals. All of those things come into play when you evaluate whether or not you need an LLC. And it's not about being fancy. It's just about protecting your assets. So I also want to say that I'm not an attorney. I'm a CPA of 30 years. I've been through enough to where I generally know what takes place, what the lawyers and attorneys advise. This is general information. You're not specific and not individual. You seek the professionals that can help you. The first thing I've got to get is an LLC is not a tax strategy. Get that through your head. I am so tired of seeing this stuff in my feed. LLC will save you taxes. How to save taxes with an S Corp. How to save. You can get into some of that, but how you're going to do it initially, if you're an individual, not really going to save you $1 in tax. There are ways you can protect assets. There are ways to avoid some self-employment tax, but the LLC should be thought of as a legal shield, not a tax saving strategy. It does absolutely nothing regarding saving any sort of federal income tax. I'm not going to get into the state income tax part because, I'm in Texas. We have state, no state, but federal, and, we border Louisiana. So I've got clients in Louisiana. I've got clients in North Carolina. I've got clients across the country, some of which have state income tax, some don't. Colorado clients. But think of an LLC like a fence. It legally shields your assets. And an attorney will tell you better than me, but generally, it gives you what we call outside and inside protections. If done right, it will provide protection from potential creditors or litigants getting to the assets inside the LLC. If you do something personally, let's say you're mowing the yard, rock flies, hits a neighbor's kid, puts his eye out. Here comes a lawsuit. You had your grass catcher thing pulled up like I don't do. You're at risk then. All your personal assets are at risk. You personally were negligent if they prove that. You put the thing up, you put the guard up. You're obviously negligent. The rock flew right out, hit my kid right in the head. So there you go. Now, what happens if all that ranch land is in an LLC and it's properly handled? We'll get into that later. You have protection against a creditor getting to that land. Not 100% guaranteed. Nothing in this world is, but it goes a long, long way, especially if you handle it properly. I've had clients who have had offshore equipment, ships, jackup rigs, things of that nature. We specifically set the LLC up with all of those assets in it. Nothing else. No employees, no contractors, no nothing. That entity owned the assets. We opened another LLC that did the operations, had the employees, didn't have very much money. Turns out a lot of the profit was going to the LLC that owned the equipment and the offshore boats and the vessels. And our lease agreement was fair market value. The lease agreement was signed every year from the LLC that owned the assets to the LLC that did the operations. In that contract, it clearly stipulated all safety measures were to be handled and were the responsibility of the operating company. The LLC had no responsibility regarding the seaworthiness or the Coast Guard inspections or anything to do with safety. All of that had to be maintained and proof had to be provided to the leasing company. So you see what that does. It puts all of your liability into an LLC which owns nothing. Typically doesn't have much money by the time that operating company leases all of the equipment from the other company. It's done at an arm's length. Court can't come in and say, oh, this is obviously just to escape liability. You know, the guy's sloppy and negligent and horrible. And look, he didn't keep any records. Sometimes he did leases, sometimes he didn't. He did them for way too much, way above market. He intentionally kept that operating company broke, or he did it way too little for, smaller amount. That's what I say. You have to treat those entities as if they are strangers to each other, just like I were leasing equipment to you or vice versa. But you could do that with farm and ranch equipment. You could put all of the equipment into an LLC that owned nothing but the equipment. Sorry, there goes my AC. There are many ways to do it. So that's all I wanted to say about that. Just realize that LLC is a fence, keeps things in, keeps things out. If you had all of your equipment in an LLC, cattle, maybe, equipment, land, someone were operating a tractor and did the same thing, they were working for that LLC at the time and they were negligent. All of those assets can then be attached to. So, in my opinion, I advise most of my clients to keep the assets that are of extreme value and typically not attached to, well, they are generally attached to debt, but the good kind of debt on an appreciable asset like land. The equipment, the operations and all that can be under the operating company. You keep that land separate. You have lease agreements. You lease it to yourself just like any stranger would, and you move from there. It keeps your personal assets also separate from your business assets. So you have in that instance, an operating company, a lease land holding company, basically an LLC with land in it. That's it. All they do is collect rents, pay taxes, and pay the note. The operating company does all the operations. That's where the contractors / employees exist. That's where the potential injury exists. That's where maybe some of the farm equipment, PTOs, are not a nice thing when you go get tangled up in one of those. All of that stuff exists in a separate LLC, but in an LLC. And all of the paperwork that none of you guys like to do, and trust me, I know 90% of you guys hate it. And that's what we do. That's why I'm here. But all of that paperwork needs to be maintained. I have so many people who just commingle everything. They mix. It needs to be, I'm going to stop with that because I'll get into another rabbit hole and I really don't want to go that way. But you need to keep the stuff separate. You need to treat it just like it were a stranger. If you and I were in business together and I came out and pulled up to your fuel tank and started filling up a pickup with diesel, you're going to want to know how much and why. How many gallons did you get? You owe me. So keep that kind of stuff in mind. You have to think that way. Now you talk about how is that LLC taxed? What's the difference between it and a Schedule F? And remember, this is not a tax tool. This is a liability protection tool. So if you're a single member, one person starts an LLC, your default reporting is disregarded. It's called a disregarded entity. The IRS says we don't even recognize that. And that's okay. You're disregarded for federal tax purposes. You're not disregarded for state and liability purposes. Completely okay. So you have a Schedule F. Looks just like the tax return you've been filing with your farm and ranch activities right there on it. But you've got this entity. Pretty nice. Let's say in my example, you did 2 LLCs. You did one for the land and the debt and the note. And remember, you've got to get if this land's already separate, you got to get the financing company to agree to that. They'll typically agree to it, moving the debt into the LLC name. It's far advantageous if you can purchase it that way. Start the LLC before you buy the land. Have the lien, the mortgage, everything drawn up in the LLC's name. You'll have to personally sign for it, but that doesn't negate the legal liability of that, or the liability protection of that LLC. Not to my knowledge. Again, talk to an attorney. My experience, it doesn't. So in that example, you set up a land LLC, we'll call it an operating LLC, we'll call that. That operating LLC is your Schedule F. It's going to be calf sales, cattle sales, whatever, farming income, whatever it is. That goes on a Schedule F. Those lease payments you deduct on that Schedule F, and they need to be at fair market value. They go to the LLC. The LLC is a Schedule E item. That's land rent. That's an entity that holds pasture to lease to anybody. That's not a farm and ranch activity. Leasing land in and of itself is not a farm and ranch activity. So you've got a Schedule E with the lease payments and everything going to that LLC. And it's disregarded because it's just you, just single member. So you have 2 things now. You have these 2 LLCs and you haven't done a thing different, really. You've added a Schedule E to your tax return. Now, I could get into a scenario or scenarios in which that pasture lease is part of your farming and ranching activities. We won't go there. We'll just use that as an example. You consult your tax advisor. Don't come at me with how wrong I am. You do it however your tax professional wants you to do it. I'll tell you how I do it. When I do it, I'll do it the way I want to do it. How about that? And the way I've successfully defended it in audit multiple times. So let's get past that. And that, with that structure, everything's easy. It's just a Schedule F, just like you've been doing. There's no requirement to have a balance sheet. You're not a corporation. Get that through your head too. LLC stands for Limited Liability Company. The limited liability company can be taxed multiple ways. Disregarded, like we just talked about. Or you can elect to be taxed as a corporation and then elect S status, subchapter S status. So now you're an S corp. So you could be disregarded, a C corporation. You better have a good reason to do that. An S corporation, which you need more good reasons to do that because of basis limitations. You can get into some issues. Or if there's more than one of you, a partnership. Now, in community property states, you can have a husband and wife, members of LLCs. You're not shareholders. You're not partners. You're not, what other words do I hear often? You're members. I'm not going to get into drawing up those agreements, and you talk to your attorney and and they will tell you the best way to draw up the LLC. I would suggest not going to a LegalZoom or something like that unless you consult with an attorney there. I don't want to knock those people that I haven't dealt with, but there are ways to draw up an LLC that make it even more advantageous. What happens if a member gets sued? Is that member kicked out? You get into charging orders and how people could get to the income of the LLC. Let's get back to a husband and wife in a community property state, not in a separate property state like Louisiana. In a community property state, a husband and wife can be members of an LLC, and that LLC be considered a single member LLC. You say, wait, you just told me more than one. That's a partnership. It is, unless you're married in a community property state. So you're either disregarded. If there's more than one of you, you're a partnership, a corporation who elects S status or not. That's the three ways. So if you're a single member and you're one person and you're disregarded, or two people married in a community property state and members, you can be disregarded. Your tax return looks like it always has. Nothing different. Schedule F for farming and ranching activities, Schedule E for any rental real estate activities, maybe a Schedule C if you're doing something different, but your tax return looks the same. There is no corporate record book to maintain. I would suggest highly that you do annual meetings. I know that sounds ridiculous, even if it's you journaling what happened for the year. The more contemporaneous the information is and the more at arm's length it is with everyone involved, the stronger you'll be in court. Okay. So that's generally easy to keep up with if you're a single member. But when you get into situations where typically this stuff falls apart is you have multiple partners, significant liabilities, you're mixing land ownership with operations, you're growing fast, you need a different entity structure for whatever reason. Maybe it's employees, maybe it's benefits, maybe it's something else, maybe it's some sort of business plan that you've engaged in to acquire wealth, maybe it's 401k plans. There are instances in which you go the LLC route, you will want to elect to be taxed as partnership or more than likely a corporation and then elect S status. So, I'm covering my notes and what I wanted to talk about. I want to make sure that that we go through everything. And pretty much, I took some notes about row crop operators, multi-sibling approach. A lot of those things will give you reason to be an LLC. If you have I have a client now, a brother and sister. They're starting to inherit the assets of their uncles and grandfather, great uncles and grandfather. So a formal LLC with multiple members like that, even if it's siblings, goes a long way. And it's a partnership, and the profits are subject to self-employment tax, just like the profits of your Schedule F are subject to self-employment tax. There's no tax benefit to this. None. There's liability protection. I'm not going to get into S corporations. There is potential for tax savings regarding wages paid you versus profit. We won't go down that rabbit hole. It's a whole nother topic, and I will get there. I'm not there yet. So just realize that if you have significant liability issues, multiple contracts, lots of debt, lots of independent contractors, Maybe you've got other leasing that you're doing on the land. Maybe it's water rights. Maybe it's, dirt pits. Maybe it's, actual selling of raw materials. All that ancillary type stuff. Maybe it's hunting. Maybe somebody goes out and climbs one of your fences and hangs himself upside down and shoots their toe off. I don't know. Trust me. I've heard just about every scenario there is out there. So that's the bottom line. This entire setup is about liability protection. So I think we've talked about every type that I can think of. Oh, this is another example. Ag tourism events. I've got a client who actually is going to do some of this. Come out to this ranching activity, bring the kids. You've got a lot of big animals out there that do a lot of unpredictable things. Liability is huge. Fencing and boundary issues, crop spraying or aerial service for, fertilizer or whatever it may be, pesticides, whatever. So, with that being said, you know now why you need an LLC and what it is generally and how it's not, again, a tax savings vehicle. The problem is bad bookkeeping. You hate to do it, but it's just bad behavior. All of these things that I tell you about that need to be at arm's length. Leasing, contracts, engagements, all that stuff needs to be documented. I know farmers and ranchers didn't become farmers and ranchers to sit in an office all day. I get it. I love when I go out to my client's ranch, or I've got a Texas A&M seminar that I'm going to in a couple of weeks. And I love getting out there. It's a beef sustainability, herd sustainability seminar. It'll be interesting. I'll learn something new. I always do, meet new people, and it's fun to get engaged with that kind of stuff. Sitting in an office like this, making YouTube videos, not so much, but it helps my clients, and I'm able to share this with them. When they have the question, I don't have to regurgitate the information over and over. But bad bookkeeping, bad record keeping, same thing your 4-H advisor told you, same thing your FFA advisor told you, same reason you had to sit and keep track of the books on your project and all that stuff. Try to develop that discipline. If you don't like doing it, hire someone. I'm not going to go out and farm and ranch cattle. I've got a side of beef that's coming pretty soon, though, that I bought from a client. So hire someone. Realize that you trying to save the fee of an accountant it's not the way successful business people do it. I know I'm saying that as an accountant, but trust me, they hire the work that they aren't good at. It's like plumbing. I can go in there and fix anything regarding plumbing, most electrical. Do I do it? No. I've got rent houses that I could go fix and save $400-500. No, I'm not going to do it. I'm going to sit and do what I'm good at, make money, pay someone else to do that. So just realize that your record keeping is crucial. The arm's length transaction, when I say arm's length, you would treat every transaction, even if it's with yourself, with the LLCs, as if they were strangers, as if it were my LLC and you doing business. So if you want to get into keeping records and anything beyond that, it's fine. You can go as deep as you want to go. The main thing is to maintain good, clear, concise records. That generally means an accounting package, not a bunch of spreadsheets. When you go through an audit and I've got to, whoever's defending you has to supply an agent with that sort of stuff. It's just a mess. You're going to end up with disallowed deductions, potential tax liability increases, all of that stuff. It's just not worth it. Either do it right or pay someone to do it. We've talked about what how to decide. If you're just a sole operator, Schedule F, maybe you're leasing land, maybe you don't have a lot, you've got a small herd, continue doing on Schedule F. You don't need an LLC for that kind of stuff. Just get good insurance and go on about your business. But when you start acquiring assets, land, employees, things like that, that's when you need to sit down with someone qualified. Don't search YouTube videos and don't take my advice for it. Find a good qualified farm and ranch CPA with experience and an attorney with experience, farm and ranch type activities. Don't take anyone's word for it. Certainly don't watch those crazy TikTok videos that are for sensationalism only. I'll get off that. I'll wind up getting my temper up. I've seen some garbage advice out there and from very, very, very popular people with big followings. And I'm just a little old me, but take it for what it's worth. The last thing I guess I want to talk about, or one of the last things, is the LLCs give you the ability to transfer ownership because it's now an organization, right? If you die, you can leave your membership interest. You can gift membership interest. So you've got this LLC with a bunch of land in it. Say it's you and your brother, sister, whatever, two brothers, not husband, wife. And you want to gift it to those children. Each of you have 2 children. You start when they're very young, utilizing the annual gift tax exclusions, where you can gift a certain amount to any individual and there's no tax effect or anything, no reports to file, no return to file. You can start gifting interest of these assets at a very young age and a decent, significant amount. And remember, you don't have to share in profit and loss the same way that you own the capital. So let's say you're 20 and you did this for 30 years and you've gifted half of the farm away to your kids. That doesn't mean you have to share half the profits with your kids. You can have a different profit and loss sharing percentage. All of this will be documented in your organizational documents, what the profit and loss sharing or agreement is. It may be that the kids own 25% of the capital each. That's 50. And the husband and wife own the other 25% of the land, the capital each. That's the other 50%. But the husband and the wife are the only 2 that share in the profit and losses. Kids don't. So you've effectively passed half of that farm and ranch tax-free. It's just something to think about. Estate planning and legacy planning for these farms and ranches it's huge. But we won't get into that. That typically involves CPAs and tax attorneys or estate planners working together usually, and someone with experience. So you're going to spend some money doing that. But that just about, I think, sums up everything about an LLC. If you have questions, put them in the comments, please. I'll try to answer them. I'll do my best. If you think I'm wrong about something, which I'm frequently wrong, frequently I say things too that I can defend. They may not always be 100% correct, but depends on the manner in which you do them. And I don't tell you that manner here because I don't want you to go out and do something and then come and say, hey, this yo-yo on YouTube told me, right? So I don't want to go down that rabbit hole. But if you enjoyed this, same old thing, that tweaks me when I have to say like and subscribe, but I want to build an audience. I'm going to move into the podcast world. I'm going to start interviewing these ranchers. It's just dedicating the time, and it is it's difficult because I work full time as well. So if you have any questions, if you liked it, like it. If you have any questions, leave them in the comments. And like I say, if I can help you with anything, reach out. Be happy to. Thanks.